Hello and welcome to another episode of Brew Time with me, Vincent Hung. On today's episode, I'm going to talk about money. And yes, this includes the well-debated topic of cryptocurrencies. And by the end of this video, I'm going to conclude on whether I think it's a Ponzi scheme or whether I think there's a future for cryptocurrencies. When I have this conversation with people, I always hear them talking about blockchain and how this new technology is going to be the future of the world. Now, I'm no tech wizard, and if I were to build a blockchain, it'll look something like this. But I understand on a high level what it's trying to achieve. It's trying to build a decentralized and transparent banking system using these digital coins, which are mined using computing power. As more purchases are made online, cryptocurrency is a perfect medium to exchange between the buyer and the seller in a market that's transparent and accepted globally. Also, if you come from a country where the currency might be hyperinflated, cryptocurrency is a good medium to store your wealth. However, can cryptocurrencies be the future of the US dollar, the euro, or the pound sterling? Will we be buying things using cryptocurrencies in the mainstream market? At the end of the day, a country's central bank will be sitting on stacks of gold, which in turn give the paper note its perceived value. Now, if you were the central bank or a country's government, would you let Mr. Millennial come in and jeopardize that? And that's the reason why I'm investigating in this video whether I think cryptocurrencies have a place in modern society. There is $840 billion worth of the stuff currently on the market, so it must be legit, right? And to answer that question, we need to step back in time and understand what is the history of money. To explain my point, let's go back in history and try to understand what money actually is. So if we go back to a time where the human race lived off the land and there's no currency as we know it today. An exchange might happen if a potato farmer, let's say, wanted to make a meat stew. He would then go to the neighboring pig farmer to swap a sack of potatoes for a pig. Now, I'm just making up the potato to pig exchange rate, as this would be dependent on many factors. So for instance, whether the pig farmer actually wanted potatoes or how many pigs the pig farmer had. This also works the other way. So if the potato farmer had a particularly bad season, a sack of potatoes might be more valuable to him than previous years. Also, what is the size of the sack of potatoes? As you can imagine, this is two people trying to trade two different products. And already there are so many questions. To complicate things a little, I'm going to throw in an apple farmer. So let's say the potato farmer now wanted apples. However, the apple farmer wanted pigs. For the potato farmer to get apples, he would need to go to the pig farmer first to exchange his potatoes for pigs, and then use those pigs to exchange for apples. So this is only three goods, and between the three goods, there would be three different exchange rates. As you can imagine, this gets complicated very, very quickly. Now let's say the apple farmer gets sick and needs urgent help from a chemist. He would go to the chemist and ask for some medicine in exchange for, let's say, 5 bags of apples. And because they live in a small and close-knit environment, the chemist knows that the apple farmer is good for his word and provides him the medicine in exchange for the 5 bags of apples. Now, all this is based on trust and promises, and because they're in a small and close-knit environment, they trust each other. However, as you start adding more people, that trust is diluted. I mean, in today's society, would you trust a cold call salesman with your money? This is where a common currency like gold comes in handy. So now the potato farmer, the meat farmer, the apple farmer, and the chemist will have a common measure to value their goods. And let's say, for instance, everyone knows 10 grams of gold would get you a sack of potatoes, 5 kilograms of apples, or a pig. And if you think about the chemist, he would also be happy to accept this common currency, knowing that at a later date, he can convert this into anything he desires. And this convertibility is important. Now, after that brief and watered down history of why we have money, what form does money come in? Early forms of currency may have been rare seashells or rare stones, and more recently, precious metals. And this might be measured in weight, so everyone knows X number of grams of gold or silver would buy you XYZ of goods and services. There is trust that if I had gold or silver, I can exchange this for other goods and services, and other people will be willing to take this as a form of payment. So if I wanted to make my potato and pork stew, I would need gold or silver in order to buy my ingredients. And it is this trust that upholds the value of gold or silver as a currency. Taking this one step further, kings or empires would have coins which are stamped for authenticity, and counterfeiting these coins held heavy punishments. All this to create trust within their empire or their kingdom, so that the people would know that holding those coins meant that they could trade for goods and services that they need. Fast forward to today, instead of trading with gold coins, we now trade with steel coins and banknotes, all of which is backed by heaps of gold sitting in the Bank of England's vault or the Federal Reserve in the USA. So when we pay for something with a £10 note, what we're actually passing on is a promise that you can take that £10 note to the Bank of England in exchange for your gold coins, historically speaking. And again, we accept £10 as a form of payment because we trust that we can take that note to the Bank of England and they will pay the bearer on demand the sum of £10, which you can see written here in small letters. Something very similar is written on the Hong Kong dollar. It says promise to pay the bearer in demand at its office here. And the US dollar has written on it, this note is a legal tender for all debts, public and private. And more importantly, it also says, in God we trust. The key here is trust. And the trust that by holding that piece of paper, you can convert it into any goods or service. The piece of paper itself actually holds no value. You can't eat it, you can't build a house with it, you can't wear it. However, you can exchange that piece of paper for food, for shelter, and for clothes. Money doesn't have to come in the form of banknotes and coins. And the concept of money has been invented many different times across the world. And on this one occasion, I'm not going to be talking from experience, but you can take prisoners exchanging cigarettes as a form of currency. So a certain prisoner who doesn't actually smoke might accept cigarettes as a form of payment because they trust that other people will value that cigarette and they can then convert the cigarette into other goods and services. Now that I've explained that trading using currencies doesn't have to be physically in money and coins, this brings me neatly onto electronic payments and cryptocurrencies. So in the UK, for the first time ever, more card payments were made or electronic payments were made than physical cash. And given the pandemic and that we're buying more goods online, it's probably even more now. So transactions made electronically without the physical exchange of money isn't something new. I mean, I get my paycheck into my bank account and I spend it, but I rarely touch a coin or a note. And prison has taught us that trading doesn't have to be done with currencies as we know it today, and have known it since 1694 when the first UK banknote was produced. So in theory, trading with cryptocurrencies should work. However, as I mentioned before, fundamentally it comes down to two things, convertibility and trust. So in terms of convertibility, the question is, if I'm holding cryptocurrencies, can I purchase whatever I want when I want? And the answer to that is no, you can't go down to the supermarket and purchase a pint of milk using your Bitcoin at the moment. But the NFT market has shown that you can convert your cryptocurrencies into whatever your heart desires. So this all started out with poor quality images and then went on to images with apes. However, as the metaverse grows and there are more and more digital products, there will eventually be more and more things that you can buy using your cryptocurrencies. And also, you have companies like Coca-Cola, Nike, or Adidas who have sold their physical products along with NFTs. And also more recently, a house is transacted on the market as an NFT. So there is a way that you can convert your cryptocurrency into digital or physical goods. The next is trust. And I guess this is the biggest hurdle for cryptocurrencies replacing traditional currencies for transactions used by everyday people for everyday goods. The biggest red flag to me is that the identity of the people or the person behind Bitcoin is still a mystery. 13 years ago, a person or group of people using the name Satoshi Nakamoto released a paper describing a new software system called Bitcoin. However, Satoshi Nakamoto is a fictitious name and no one really knows the person or people behind Bitcoin. Craig Wright, a computer scientist slash businessman, claimed to be the founder or at least part of the founding team of Bitcoin, though critics believe that he was actually doing it for public attention and personal gain. Others think Nick Szabo, a computer scientist, legal scholar and cryptographer, to be the real Nakamoto. The key thing here is, how can something so cryptic be trusted by the general public as a means of storing their wealth, which they have worked so hard for? The definition of cryptic is having a meaning that is mysterious or obscure. So the lack of trust is inherently built into the name. However, you cannot ignore the crypto advocates out there. And the fact that Ethereum is actually used to trade NFTs means that cryptocurrency is trusted by certain users to purchase certain products. The issue is, how do you get people to trust cryptocurrencies more than they trust the central banks, who are sitting on heaps of gold which are used to back their currency? And gold, incidentally, is the ultimate symbol of wealth, which is even good enough for baby Jesus when he was born. Also, looking at the cryptocurrency market lately, it's been extremely volatile, and I'm not sure I would feel comfortable having my hard-earned cash stored as cryptocurrency in the current market. It's probably a good time to explain that I would detach my views on cryptocurrencies with my view on blockchain. I do believe blockchain as a technology has the potential of changing the world and the way we live. If you look at Bluetooth, for instance, that used to be a useless function on my Nokia device. However, now all of my other electronic devices are connected to my mobile phone using Bluetooth. So I do believe blockchain technology has the potential to change the way we use money. This, I don't know, just throwing an idea out there, could be the UK or the US government developing their own form of digital currency using this blockchain technology. I don't know. Given that there are over 18,000 different cryptocurrencies out there and only 180 circulated currencies recognized by the United Nations, I do believe the majority of cryptocurrencies are Ponzi schemes. However, it's not to say that you can't make money out of Ponzi schemes, as I do hold a small amount of cryptocurrencies. However, this has always been a small part and will remain a small part, and I do view it as a bit of a gamble. If you want to see what proportion of money I have in crypto, please check out my suggested video. Until then, I hope you enjoyed this video and I hope to see you on the next one. Ta-da!